Hey everybody, good evening. It is Sunday, the 13th of April, 2025. Hope you had a good weekend. Got a little bit of rest from this market because it's been quite volatile, obviously, and I know I was exhausted on Friday. There was so much activity and there will continue to be large volatility. If you're a trader, this is what you live for. This is why you trade. These are the days where we have, great intraday action. And an investor, that's not my deal. I don't, I do some investing, but that's not what I talk about because it's not my area of expertise. I've been trading full time since 1991, and that's where my expertise are. And that's what we're going to talk about this evening is trading and looking at where is my screen with the futures. Uh, Man, I got to get better at this stuff. It's true. I admit it. But just bear with me for a moment. I'm thumbing through this to see which tab to share. Oh, Chrome tab? Is that why? No. Window. Let me see. Let me try to expand this. Okay. Oh, wait a minute. Is it over there? Okay. I'm told I want to do Chrome tab. And actually, though, um, just bear with me one moment. Here's what we'll do. We will go to, I was going to start it out with, oh, and there it is. Yeah. So here we go. So we're looking at the futures. On the left, we have the 30-minute time frame for the ES. That's the S&P 500 futures. And on the just below that, we have the NQ, the 30-minute chart. So, looking here, it's basically, if we go back to the blue anchor, that's the anchor from last week. On the right, we have the 1 minute time frame, and that is the new week to date volume weighted average price. Why do we look at the week to date volume weighted average price? If you're not sure yet, well, we have just some incredible moves around that week to date volume weighted average price at times. And this week we had just the perfect pullback to that. If you recall, this was on, what was that, Wednesday? We were, coming down pretty hard. So let me frame this a little bit better. The black is the anchor from the new tariff news. And that was what we saw the big rally. This is down here where Trump said it's an incredible, time to buy, basically. This is where the news came out. And as we broke below that volume weighted average price, there was a beautiful short down there, came into the 5-day moving average, and more important, right there perfectly to the week to date anchor. And it bounced beautifully from there right up to the anchor again from the new tariff news. And then Friday afternoon, we made a higher high above the flat to rising 5-day moving average, and we had some momentum to the upside. Now, we, of course, have more tariff news over the weekend. So we look at our chart. This is the new week to date volume weighted average price right here. It begins, actually for me, it began this week. I didn't do a 15-second chart, but I did trade off of the 30-minute chart. I made a trade right here on the short side as it was backing away from there, made a couple points and said, what am I doing? I'm not a junkie. I don't need to do this shit on a Sunday night. So I made a couple $100. That was all. And now we're looking at this saying this is our new week to date volume weighted average price. There was a beautiful short off of that. I participate. I don't really trade the NQ, so I don't really pay as much attention to it. But this is going to be our new week to date volume weighted average price. It begins the moment we have a new trade on Sunday night at 4 p.m. my time, 6 p.m. Eastern, and it continues throughout the week. So that's where we are with that. And the orange is the anchor from the original. Here's where we're doing the tariffs. So that's just kind of framing it on the futures. So we've got some follow through to the upside. I still think that we're not in the clear, but I'm a trader. So what I'm looking for is the intermediate, short to intermediate term time frame. I did day trade the afternoon on Friday. I didn't hold any over the weekend. So I didn't participate in this. No problem. I don't care if I miss a gap up. I really don't. Not when we have the longer term trend still lower. Let's take a look at Bitcoin. As I've mentioned in the weekend video, we still have a pattern here of lower highs and lower lows. I'm not excited about it. The one that is most interesting, as I mentioned, was the Ethereum. Now, Ethereum came down to the anchor all the way from the beginning of the inception, not the inception of Ethereum itself, but from the very first trade ever on Coinbase right here. That's the anchor off of that. And you can see in 2022, we saw buyers in there twice. And on Friday, I'm sorry, on what was it, Thursday maybe, we came down perfectly and touched that anchor. I didn't buy there. Hindsight says maybe I should have, but we still have a pattern of lower highs and lower lows. I think that for Ethereum, this is the one that I'm probably most interested in right now in terms of maybe it undercuts there slightly and then starts to rally. So I'm keeping a closer eye on Ethereum than I am Bitcoin right now. Bitcoin, my opinion is still that we are below all these key anchors, the anchor from the election year to date, from this high, which was the all-time high, from that high. We have lower highs and lower lows. I still think it's likely that we come down to this 68,000 level. If we don't, I don't care. I don't have a position. But right now, when we have all this indecision, there's just no reason to be involved. So let's switch screens and go over to the let's see, switch screens and go to StockTwits. Not StockTwits, but this is on StockTwits, of course. So thanks for hosting. Let's go to trading TC2000 rather, and take a look at some equities. And I've got a few requests from subscribers to Alpha Trends. I always get to those first because, hey, they're paying customers. Why wouldn't I take care of them first? So my main screen there that I'm looking for is, I gotta figure out a way to, let's see, it's told Chrome tab, but window is really where I need to be. And, oh, that's why. Okay. Let me switch this and that'll give me a better way of identifying which screen I'm on. I've got so many tabs open, you wouldn't believe it, in terms of charts on my screen. So there we go. And that's not the one I want to share, but this one. So here we go. This is TC2000. And as we always talk about, we'll start with the S&P 500. On the left is the daily time frame. On the right is the 30-minute time frame. And when we look at this stuff, what we see, I was just trying to make sure it was streaming over there, and it is. So we've got, the market, the S&P right now up about 1%. Let's see, the futures, the ES is up 80 basis points. So, another 4 or 5 points from here. So 537-ish is where we are right now. The anchor that's been kind of interesting is, of course, we have the anchor from the all-time high. That's this red one. So let's just zoom in on this a little bit more. This is the 30-minute time frame, and that orange dashed line is the 5-day moving average. As I say, when we're below the declining 5-day moving average, it's guilty till proven innocent. Well, right now we're above a rising 5-day moving average. The only problem with that is it's not an all clear because we still have a declining 20 and 50 and 200-day moving average. So this is still highly suspect. It's possible we might rally all the way up into the 200-day moving average. I don't think it's likely. And, when I look at stocks, I'm looking at, what's the likely probability, not the endless possibilities. I'm not a believer that just buy the dip. That's clear. And again, I'm a trader, so I'm always talking from a trader's standpoint. This might have been the buy of a generation in terms of investors go. I don't really think so because when we look at the weekly time frame, we still see that we're below the 20, 31, and 42-week moving average, just like we were over in this period. And we had some phenomenal rallies over here. So we can have great rallies, and there's nothing wrong with trading those. But what's generally happens is the sum of the decline, and maybe even it does this. Maybe that was the low, and in 3, 4, 5 months, we slightly undercut that. These moving averages start to do this. And then perhaps if that's the low, then we would most likely undercut that low just a little bit. So, if this low is, let's just take a look together. I forgot the exact number. It doesn't matter. 481.80. If we came down to 481.20 and then reverse from there, I would probably be a buyer right here with a stop below that low for a trade and think that, if they didn't scare you out, they'll wear you out. and that longer term moving average does this, I would not be a comfortable investor until it does this. So again, do I think the market made a low? Maybe, maybe not. I honestly do not care. It's not my time frame. My time frame is lately day trades, a little bit of overnight, but even swing trades, I don't have the confidence to hold for more than a day or two, truthfully, and even not full positions. So if this is the low for now, a lot of people will be looking at it going, I'm so smart, I'm so smart on the way up. It falls down and they say, well, I'll just set my stop under there. And then it undercuts that briefly. That ends up being the low. It does, if they didn't scare you out, they will typically wear you out, just like they did over here. And it doesn't happen that way every time. We do see V bottoms, but they are very rare. We have a global reset in terms of trade. So is it more like this period here, 07, 08, and 22, 23? Or are we going to see a V bottom reversal? I think it's unlikely we're going to see a V bottom reversal, but I'm also not saying it can't happen. I'm going to trade what I see in front of me. Right now, the futures are, higher. So great. It's going to rally up. What I need to say is, or the way I think is, we've got a declining 20-day moving average below a declining 50, below a declining 200-day moving average. It's more likely to fail than it is to reverse. The trend once established is more likely to continue lower than it is to reverse higher. Doesn't mean it can't happen. I'm not here, making bold claims that this is going to happen, or just because I've shown examples of 2008 or 1929 that I think that's going to happen. I'm saying be aware of the possibilities. Know your time frame. So what do we see on the 30-minute time frame? Let's go back to that. We've got the anchor from the all-time high it made in February. That's that red line. And we saw that sellers have defended that quite aggressively. The sellers, since that high, from that failed breakout, came this fast move lower, and we've seen two strong drives lower while we were below the declining 5-day moving average. The orange dashed line is the 5-day moving average. While it's declining, I think you're a fool if you're buying for the long term. And now, does that mean I think you're a fool if you bought right here? If you were kind of gambling, but there were strategies to get involved there. Let's take a look at what I mean. So we'll look at the 2-minute time frame. And even as an investor, you might think, well, I have no business looking at the 2-minute time frame. But this was Monday of this week. We had our big gap lower, and if you bought right on the open, you were gambling. You bought at 488 and it went down to 481 and change, right? So that's a big move. That's not what I'm not interested in holding down 7 points in the first 15 minutes of the new day. Instead, wait for it to get back above the VWAP. And then you got a nice bounce. And then what? Well, then you look at it and say, where were we from that anchor from the year to date low? Again, we came down to it on Wednesday and bounced perfectly from there. So always have the week to date anchor on your charts. It doesn't mean it's going to be the perfect support or resistance ever, but it's a great reference point because a lot of people trade around that, and you need to understand that. So what we saw here was a handoff, and this anchor, for whatever reason, from this first handoff, was resistance here several times. We gapped up above it and failed. Then it became resistance again and again and again. And then this week it rallied right to it again. So what I'm looking at this week is if we rally up towards this 544 level, that's my first level of interest that says, hey, I've got to be aware. If we start to, if this is Monday and we start to break below the daily volume weighted average price, there's probably a good day trade short, maybe down to the anchor from the from this orange move here. So from the tariffs, that is. Maybe it comes down and finds buyers at the anchor from this week's tariff news, the 90-day halt, and does this. And then if it rallies up, then I would look at it and say, okay, let's look at the year-to-date anchor. Is it going to come up through there slightly like it did a couple times and then completely fail? Well, then I want to keep an eye on the anchor off of the all-time low, not the year-to-date low, which is this green one, which was made last Monday. If we start to see something like this and that first rally up towards that, so I'm sorry, that first decline down to it. So let me just draw this out a little bit further. And here's what I'm trying to teach you is you want to anticipate how the market will respond to these key levels. If it does this and just keeps going, well, great. Raise your stop under these higher lows. I think it's more likely that it would do something like this and then maybe come down and test the anchor from this now year to date low, maybe even dip slightly below it, shake people out, and then a great long right there. So this is, of course, for shorter term trades. And maybe it just goes and goes and goes and goes. Or instead, maybe it does this, hangs around here for a couple days. The 5-day moving average traps it like this, and then it breaks down like this. Well, that's probably a great short for a continued move lower that maybe even sees another new low. That's the way you've got to look at these markets is anticipate what are the potential scenarios, what's your time frame, how much are you looking to get involved in, and most importantly, how much risk do you take? So let's take a look at a couple of the popular names that everyone always wants to know about, which of course include Palantir. And Palantir I spoke about over the weekend, so we were not going to spend a lot of time on this. But the anchor off of this gap has not been perfectly, but it's been resistance. And when we look at this peak right here, we saw a low, a lower high, a lower low, and a lower high. So in order for, if Palantir is going to go back to 120, 130, I think what you need to see first is a lower high on the daily time frame, then a higher high. And again, that's what everyone wants to call the inverted head and shoulders pattern. But right now we have a pretty tight range. So I think that if you're involved, your stop goes under here or underneath this higher low. It's just rallied from 66 to 93. So, close to 50 points. I mean, 50%. You think we're not going to pull back here? It's kind of, it's kind of common sense. It doesn't just go 50% and keep going. It can, but again, are we interested in the likely probabilities or the endless possibilities? These are the endless possibilities. What's most likely? Tesla is stuck in this range here. Maybe it can rally up to the top end of that range. That would be a great trade. 50 points from 250. That's a 20% move. And if it does something like this, then maybe it can go. Stops under here or under here. Nvidia, it's still got a pattern here, and I've drawn this too many times, so let's clear it up. Low, we have this high, we have a lower high, a lower high, a lower high. Is this a lower high? We have a lower low, lower low. What's the definition of trend? Lower highs and lower lows. Sure, there's great trade opportunities, but until we see a higher low and then a higher high, and you wouldn't want to buy the higher high because it would be extended there. Buy here with a stop under there. What are some other names? TMDX is one that I mentioned to Alpha Trend subscribers this week that looks like it's probably heading up towards the anchor from the high, which would bring it in towards about 90. And it's getting a little bit extended here, so I wouldn't chase it. A couple of the names that Alpha Trend subscribers wanted to look at include WRB, which is WR Buckley. Let's take a look at the weekly chart to start. And here we can see, it's been in this huge uptrend. I don't know what these guys do, but it's certainly not a new idea. In other words, you're not the first to discover this. And it's, it just rallied. It just had this rally from 56 to 76. So basically 40%, right? 38%, whatever it might be. And now from that big move higher, we've got it pulling back. And here's the anchor from that all-time high. We're right at it. And we've just rallied from, always ask yourself, where has it come from? It's come from 63 to 69. So basically 10 points, 10%. I'm sorry, 6 points, 10%. So it's just come 10%. And as I said, I think I said it with Austin in our discussion this week or somewhere else. I always get asked about, of course, the normal names, but people always want to know about a stock that's up 10% recently. And I don't know why they get excited about stocks up 10% in such a short period of time. Where has it come from? It's rallied 10% in a week. Where does it have the potential to go until it's likely to encounter a source of supply that might be strong enough to become resistance? Well, we have the anchor from the all-time high, which has proven to be resistance, and we're right there right now. Yes, we're above a 5-day moving average, but it's extended. So is the risk worth the reward for a new purchase here? I don't think so. I would much rather see it pull back here. Maybe it rallies up a little bit to get people excited Monday morning. Then it will start to pull back down into here. And maybe it, tests the 5-day moving average on Tuesday, Wednesday, or Thursday, the anchor from the this pullback low. And I would be more interested in buying it right here with a stop under there or there. And then maybe it can continue to move higher. But the biggest volume that this stock has seen besides this day right here where it made a low, this is the biggest volume. Volatility tends to peak at turning points. I'm not calling a top on this stock, but it's certainly not a new discovery for the long side. It's been in a ginormous uptrend. Volatility peaks at turning points, just like it did over here, and diminishes as the trend is established. I personally wouldn't have any interest in this name. But DG, how about DG? DG, the first thing I see on DG is this is the 200-day moving average. The 200-day moving average is declining. Where does the stock just come from? It just came from 75 up to 98. So basically, it came 23 points. That's 30% uninterrupted. Now it's pulling back, and the volume seems to be increasing on this pullback. That doesn't excite me. So what we want to do is put an anchor off of that high and say, one, if they don't scare you out in a downtrend, which this stock is in, they will typically wear you out. We have a declining 200-day moving average. These rallies typically fail. Even over here, we had big rally. We had a big rally over here, but I don't trust these names at all. And Dollar General, you might think, well, maybe people are going to start shopping at Dollar General. But what do they sell at Dollar General? They sell all that bullshit they import from China, which has 125% tariff. And I'm no fundamental analyst, but that just seems like, basic headlines. It's got a declining 5-day moving average, which will, flatten out in 2 days. I would have no interest in Dollar General, whatever. How about HIMS? HIMS is in a, this is probably, I've said it I've said it the last couple of weeks. I think this is probably a 3 to 5 year high, if it can ever go back to that point. It's very similar to this one, that if they didn't scare you out, they're going to wear you out. And with these longer term moving averages, sure, you might get a little bit of bounce in here and there, but it's showing a very clear pattern of lower highs and lower lows. And the fundamental story, I know a little bit about this one as well. They were running up over here when they were able to formulate the GLP-1 drugs, the weight loss drugs. So they were, these drugs were considered a shortage basically, and they allowed pharmacies like Hims to make their own formulation of them. Well, somewhere over in here, as the stock was declining, the GLP-1s were no longer in a shortage. So they said to companies like Hims, you are no longer allowed to sell these GLP-1 weight loss drugs because we have an abundance of them. The manufacturing has caught up with the supply has caught up with demand, and now you were in there as a temporary stopgap while the supply chain was being strengthened. So they're now they're back to selling boner pills, and that's it. And it's hard to get excited about that. It's not hard. It is hard. I don't know. Whatever. There's probably a joke in there, but I have no interest in Hims. It's a broken stock in a downtrend, and the very little I know about the fundamentals say don't be excited. Apple, it's still a broken stock in a downtrend below a declining 20, 50, and 200-day moving average. If you own the stock, it's likely going to roll over again at some point. Maybe it does so up in here, but are you going to chase it on a gap tomorrow? If you long the stock from a trade recently, raise your stop up underneath the most recent relevant high or low that makes sense to you. This looks like a level of potential supply. It is the prior little low here at the 2-year anchor, so from January of 2024. It's also the declining 20-day moving average in there. And maybe it continues to go up, but raise your stop. If you hated the stock, if you own it from somewhere over here and you didn't like it when it was going down, have a strategy to exit if it rolls back over again and does this. It doesn't seem, out of the realm for the stock to move maybe all the way down to the anchor off of the 2020 low. I'm not here to be bearish. I'm here to say, listen, we've got damaged goods, and other people are going to be looking to get rid of these damaged goods. The flood just came through the town. Now we've got a clean title because we fixed it up, but the car's a piece of shit because it got flooded. We're going to go sell them in Chicago and move them out of New Orleans with a clean title. It's a lemon, and it's likely to get sold into. So Apple, I'm not excited about it. GE, and again, I'm not trying to be negative. This is what the market's telling me. GE looks like it's probably done going higher for a while. If they didn't scare you out, if they're not scaring you out of here, you'll probably, so here's what we see. We see higher highs and higher lows. We saw a higher low. I'm sorry, a lower low rather. So what it's likely to do is to bounce, and either it continues to move higher, great, raise your stop under there. What seems more likely to me is that it does this, it makes a lower high and breaks down, and then you've got this neckline, and everyone starts calling a head and shoulders pattern if it makes this lower high. This is just the way stocks trade structurally. That's it. So maybe you're due for a bounce up even towards 180-ish, 185. But, right now we're fighting with a 200-day moving average. We hit the 2-year anchor. We're at the anchor from the election. We're at this prior little band of support in here. I don't really see anything to be excited about in terms of GE. And, this is just the market we're in. BJ's Wholesale Club, it is definitely in an uptrend, and it's still showing a pattern right here on this weekly chart of higher highs and higher lows. So is this the higher low, or is this the higher low right here you want to protect your gains against? Do you want to buy a stock that is, this far extended? Maybe you do. That's up to you. It's not a new discovery, but this is the type of stock. This is how BJ's looks when, Palantir looks like this and everyone starts talking about it. It is not a new discovery. It can continue to move higher. And the name of the game, if you own it, is does your stop go underneath this low or this low? To me, that's it, because this is the definition of an uptrend. These higher highs and higher lows. So that's where we are with those. Let me take a look at YouTube over here on StockTwits. And again, SMCI, every single week from the beginning of the year, I don't understand the fascination with this stock. It is a broken momentum name. And even here, this was a huge rally, right? And trade those, but we have a declining 200-day moving average. Let's look at the daily chart. There's your 200-day moving average. It made it slightly above it. Everyone got excited, and then the stock shit the bed. And now we have a pattern of lower highs and lower lows. It's stuck below the anchor from the election over here. It's stuck below the year-to-date anchor. It's got a declining 20. The 50-day moving average is kind of flat. Declining 200-day moving average. It rallied up to this prior band of support. It is likely getting ready to roll over again. Now, maybe there's something in this tariff news over the weekend that's going to see it rally. But here's the anchor off of this year-to-date low. If it rallies up on Monday and then fails like this, it's probably a great short under here with a stop here or here. And it's no different, as I always point out, and I always get the question about AMD. AMD continues to be a broken, garbage, junk name that makes a pattern of lower highs and lower lows. It doesn't mean you can't trade these stocks to the upside, but, and that's what I should have kept that on there, because that's what I drew in, was a potential failure over here. Now we're likely to get a little bit of a reprieve in here, but prior support tends to act as resistance. keep that in mind. It doesn't mean it's going to be there perfectly. This support didn't act as resistance, but as it broke back below the declining 5-day moving average here and here, if we start to see that happen again in AMD, then it's probably a better short than a long because the longer term trend is lower. Brian, how did you short the ES at daily VWAP in the open instead of go long? I didn't do it at the open. I did it as it was about 2.5 minutes in. It rallied back up to the VWAP. As it got rejected from there, I shorted it with a mental stop above the high that it just hit. It looked like it was trying to get above. It didn't get above the daily VWAP. DKNG. And I don't think you're going to like what I have to say about DKNG because DKNG is a stock that, I already drew it in. Somebody asked me about this already. I think it's likely to rally up and then fail. Why? Because if you look at the weekly chart of DKNG, it looks very similar to this. And I spoke about this over the weekend. So go look at my weekend video because I spoke about that. But it's looking, pretty much like it's ready to go lower. How about Costco for a short sale? Very similar to BJ's wholesale, obviously. The pattern of higher highs and higher lows has now we have this lower low. Lower low, lower high. Now, how about this for a short sale is what I'm being asked. And I think that, the tariffs are going to be a stock. This is a stock that the tariffs are going to have a lot of impact on in terms of, the tariff is this, the tariff is that. It's going to be too tied to the tariffs for me to be interested in trading, meaning that we're going to get gaps that it's going to make it very difficult to control risk on. But I do like the way you're thinking about this. Now, we still have a 200-day moving average that's rising. So when we look at the weekly chart, it might be just a little bit too clever and too contrarian to try to short this one now. But if it starts breaking down in the next couple of weeks, we could see, so what I'm doing here is, identified this as a low right here. The last time it touched that low and bounced was here. That's called a handoff. The last time that handoff was touched, there's your next handoff. So I think a move down towards 830-ish looks reasonable. That's about 130 points away, 13%, 12%. But right now, when you look at let's look at the 30-minute chart. It's just a lot of choppiness in here, and I don't know how to control risk very well in it. And this 30-minute time frame looks a little bit constructive, so it's probably something I would not be interested in. What about IPO Bull? It ripped after hours Friday. Yeah, I don't know anything about this. If you were looking to buy this, the way you want to trade IPOs, there's the anchor from the IPO. You saw that the anchor was resistance almost perfectly, and then right here it got back above it. Let's take a look at what it did after hours. So holy shit, wow, it did rip after hours. So I would put an anchor on this and say, good luck with it. If you're a skilled day trader, go for it. But this is one that is very difficult to try to get an edge on. So let me see. We are, I guess we're 4 minutes over time. We started at 6 o'clock, right? I'm in Colorado. So yeah, great. Thanks everybody. We'll do this again next Sunday. Meanwhile, join me on Twitter, and I've got a inexpensive subscription option there. I provided all this analysis pretty much every day. So have a good night, and thanks for joining me.